Hey everyone, George here. So today we're going to continue our deep dive into the tax changes for businesses, as applied mainly for contractors. The topics we're going to cover today are charitable contributions, R&D expensing, energy efficient building deductions, Section 179, QBI meals, and excess business loss deduction. So it's a lot to cover. We're going to go over just briefly over each one. I want you to be aware of what's out there, in the landscape with all these tax changes. So let's get started. So starting with corporate charitable contributions. So if you're a C Corp, this one applies to you. There always used to be a 10% cap into how much can be given to charity and deducted. However, now Congress also introduced a 1% floor. So if your business has $1 million of taxable income and you donate $10,100, you can only deduct $100 of those charitable contributions. Because anything below 1% is no longer allowed to be deducted for a C Corp, and that 10% cap remains. So again, on that $1 million of taxable income, anything donated over $100,000, won't be deductible either. So if you did want to contribute these amounts and get the deduction for it, you would have to plan accordingly. Next one up is R&D expensing. And what happened in 2022 was, very unfortunate that they had people capitalize and amortize any R&D over a 60-month period. And this was a real pain because, you spent that money, you want to get the tax credit for it in the year that you spent it, but they made you capitalize and amortize it over 5 years. So you didn't often see that tax credit for a 5-year period. So now they changed that back where you could actually get the tax credit in the year of the expenditure. And for small businesses, there's also retroactive relief for 2022 to 2024 where you amend the tax returns and actually expense it in those years. So I've talked about R&D tax credits. In a previous episode, we had a guest on, and I really want to encourage construction companies to not be turned down by this, to actually pursue these credits, because especially if you have a high tax bill every year, this is a dollar for dollar reduction on your tax bill, assuming you qualify. And you would need to speak to an R&D tax credit specialist who has industry specific knowledge for construction, and they can tell you whether or not you would be eligible. So I would highly encourage profitable construction businesses to pursue the R&D tax credit for sure. The next change is Section 179, and the limits for this increase. So for those who don't know, the Section 179, it allows quicker expensing of your depreciation. There's some things that the bonus depreciation won't qualify for. There's certain auto limits under 6,000 pounds. For contractors, there's roof, HVAC system, fire sprinklers, security system. These things that are not qualified improvement property, bonus depreciation, doesn't really apply to them. So Section 179 would kick in. Previously, you were limited to a $1 million deduction under 179, and the phase out began at $2.5 million of taxable income. However, now the $1 million limit has jumped to $2.5 million, and the $2.5 million phase out has jumped to $4 million. So there's a lot more, looser 179 deduction being allowed in 2025 going forward. So the next change up is the 179D, and this is a deduction for energy efficient improvements to commercial buildings. This deduction historically has been great for architects, engineers, developers, commercial landlords, and contractors working on commercial builds. It's for energy efficient design in new construction and retrofits. It applies to lighting, HVAC, doors, windows, insulation, all these things, and it's basically a 54-cent minimum, 54-cent per square foot deduction, and it goes all the way up to $5.36. However, to make it to that threshold, there's apprenticeship and prevailing wage requirements involved, and also this range of 54 cents to $5.36 a square foot Just depends on the level of energy efficiency that you achieve in the build or retrofit. And unfortunately, this 179D deduction is going away, effective for any new construction that breaks ground after June 30, 2026. So if you want to utilize this deduction, you really need to break ground soon. Like, we got like 7 months left here. The next change is the QBI deduction, which is a 20% deduction for pass-through entities, S-corps, partnerships, all those. And here, this was set to expire originally in 2025. However, they extended it another, they basically made it permanent. And with this, they also increased the phase-out limits. So now, if you file as single, your phase-out begins at 75 instead of 50,000 previously. And if you file married filing joint, the phase-out begins at 150K instead of 100K. So this is a really good deduction for partnerships, S-corps, any flow-through entities really. And here, what you really just want to be mindful of is if you're close to the phase-outs, if you could just somehow bring your taxable income down legitimately, to get below the phase-outs, you get an extra 20% deduction of your taxable income, on top of everything else. So that's definitely something to be mindful of as you approach those phase-outs, to plan around those numbers. Next is employee-provided meals, and these were set to lose deductibility after 2025. Now they reversed that rule, so you could actually deduct employer provided meals. However, they need to be provided either through a restaurant, a catering service, or some random Alaskan fishing operations. And believe me, I'm not making that up. That's actually in the code. Unfortunately, if you have some sort of a fancy cafeteria that, inside your own operations, that won't qualify. Or if you have a general meal program not tied to restaurants or catering, that also won't qualify. But I don't think that's the case for at least pretty much all my construction contractor clients. For most of my clients, team lunches, catered meals, staff meals, in this case now they would all be 100% deductible. The final rule change we're going to go over are the excess business loss rules, where if you have a pass-through entity like an S-corp, partnership, LLC, and you have excess business losses, and there's a whole calculation behind that, the rules have it such that those excess losses become NOLs at the entity level. So you can't utilize those losses to offset, your W-2 income or other non-business income. These were going to be phased out in 2026, but starting in 2027, now they've been made permanent. So unfortunately, Congress did like this a lot. They don't want to get rid of it. I don't have too many clients that this excess business loss applies to. It most likely won't apply to you. But it is something to consider when doing tax planning and cash flow planning. So those are all the changes in the second episode that we went over. Again, in this 3-part series, I'm doing a very comprehensive review. I know this can be a lot to take in. I'm throwing a lot at you very fast. We're honestly not going into too much detail in each one. But if any one you feel is more worthy of a deep dive, please drop it down in the comments. I'd love to hear what you think is most applicable to you. And to make full circle, again, we went over charitable contributions. Now there's a floor as well as a cap. So you want to be mindful of how much you are contributing to charity if you are a C Corp. We went over to R&D expensing comeback, which is nice to go back to the old rules pre-2022, where you can expense and take a tax credit for R&D expenditures in the current year of expensing. And you can actually even retroactively file or amend and refile your tax returns to claim it such that you're not capitalizing and amortizing over 5 years. We went over section 179 expensing and how the limits and thresholds for that have increased. The 179D deduction that will be going away for any construction activities not breaking ground by June 30, 2026. The QBI deduction changes, the employer provided meal changes, and the excess business loss becoming permanent. So again, I hope you found this helpful. Click like, subscribe, turn on notifications for any updates, and hope to see you in the next one.